Many people believe that this is not yet the bull run, and to some extent, I can definitely understand that. Strangely enough, with Bitcoin, our most expensive asset, we've done a 145x and are standing quite stable. The big problem at this point is that with altcoins, we're practically back in the bear market. For months, liquidity has only been taken out here, and we are now at a market cap of $230 billion for altcoins outside the top 10. That's nothing at all. All altcoins outside the top 10 have a market cap of $230 billion. That's still extremely low. If you simply correlate these numbers, you actually understand how early we are in some aspects. And I understand that it doesn't feel like a bull run, because to be quite honest, we are still in a bear market for altcoins. And I'll also explain to you what the big problem is here, why we need to understand this chart, but also why we haven't started relocating the money yet. I mean, just take a look at the 90-day performance of the top 100 coins. We have barely 10 projects that have outperformed Bitcoin. The remaining 80 or 90 cryptos have not outperformed Bitcoin by far and have even performed much, much worse. The performance is really poor, and it currently feels really tough if you are an altcoin investor. Even on-chain signals simply show us that we are still in the accumulation phase with altcoins. We are as low with altcoins as we haven't been since 2019. And this time, there are also small changes, because let's just take a look at this Bitcoin dominance. This was the 2021 cycle. Down here, we roughly hit our bottom in Bitcoin dominance and then climbed up step by step. We have now seen our top after approximately 1,072 days, and then fell in Bitcoin dominance, allowing altcoins to perform well. Here, we drilled out a new bottom again. From here, we have been rising for over 1,450 days in Bitcoin dominance, and it doesn't rise in steps, it just continuously increases. And this is a major difference from the cycle of 2021. The altcoins are currently really low, and they are still completely in a bear market. This is mainly due to Bitcoin dominance. Here we have the chart of Bitcoin dominance without including stablecoins. And please take a look at this. We are practically at the level thoughts of 2021 in terms of Bitcoin dominance, but if we don't include stablecoins here. And of course, we are in an area where we are simply not risk averse. People only become risk averse when Bitcoin dominance falls, because then the money is redistributed just as it should be. It hasn't happened so far, and many assume that we won't experience another altcoin season in this cycle. And I honestly say, I don't understand how one can think that, because such thoughts can only come from people who unfortunately haven't evolved in the past, and who are not well versed in macroeconomics. Because the most important factor for the fall of welcome Bitcoin dominance is the Fed balance sheet. Take a look at this. When we saw a drop in Bitcoin dominance in 2017, we experienced a monetary expansion in the USA. When that peaked, and we had a tight monetary policy during this period, Bitcoin dominance continued to rise. Only when we experienced a significant monetary expansion did Bitcoin dominance drop, and the money was reallocated to altcoins. And currently, we see that the balance sheet continues to fall further and further. More capital is being withdrawn from the markets here. One just has to understand that the tighter the monetary policy, the less risk there is in this market. That's why I've illustrated it for you here. The deeper we fall, the more risk-averse people become. We are in a phase where people simply don't want to take risks because it doesn't make sense. They will take on this risk, but only after the drop in Bitcoin dominance. And as mentioned, the drop in Bitcoin dominance will occur when we no longer have a tight monetary policy, but rather a loose monetary policy. With the Fed balance sheet, we still don't have a loose monetary policy. In recent years, money has simply been made scarcer and more difficult to obtain. But we know that this tight monetary policy will end this summer. And that's very, very good, because the next step would be to start expanding the money supply again. And exactly when we see that, cryptocurrencies can, of course, start to rise properly again. Global liquidity is also important. I agree with you on that. Here we see the altcoin chart, and here the global liquidity. When we had a large expansion of global liquidity here, we also saw a massive increase in cryptocurrencies. Take a look at this. Of course, with a time delay, but relatively strong. And when global liquidity fell, we moved into a bear market here, And in the last few years, more and more money has simply been withdrawn here. But currently, we are seeing the first reasonable upward trend, and we are slowly feeling this in the altcoins and the general crypto market. This is going to be very interesting. What I can tell you is that global liquidity also plays a big role in the crypto market. The tighter the monetary policy, the less risk investors want to take. And accordingly, in the last months and years, we have only seen gains in Bitcoin because people were not so risk averse. The good thing is, most countries had a tight interest rate policy. This interest rate policy has already ended in most countries, and most countries are slowly starting to print money. And accordingly, global liquidity is also increasing. Fresh capital is slowly entering the markets worldwide. Take a look at this. This is the US M2 money supply. We are slowly seeing an expansion. If we simply look at the Eurozone M2 supply, we see that it is also currently rising massively. This means that we are currently getting a lot of capital from the Eurozone back into the markets. Let's look at the Japanese yen, which has also become very significant. We can see that it was kept very tight in recent years, but it has been rising massively again recently. Let's see how long this continues. This means that a lot is happening globally, and all of this suggests that we can slowly start to see a drop in Bitcoin dominance in the near future. And then, as I said, people become more risk tolerant. The lower we fall, the more risk people take on. But eventually, of course, the switch will come again. One must not forget that. And with Bitcoin dominance, I find this chart significantly more important than the regular chart because we haven't included stablecoins here. And we are currently at 72% Bitcoin dominance, almost at the same level as in 2021. Because in the normal Bitcoin dominance, stablecoins are included, and they have simply become too large by now. We had just 2 large increases in stablecoins, which makes this normal Bitcoin dominance a bit distorted. This chart here makes significantly more sense. We are almost at the level of 2021, and that's why I also think that there isn't really much more room to go up. Sure, we might see another 3% in Bitcoin dominance here, but there shouldn't be much more than that. And that's mainly because, as mentioned, we are now slowly seeing a loose monetary policy. This simply means more money for the markets, and this money primarily goes into altcoins because altcoins are just risk assets, and people only invest here when there is monetary expansion. The question is, will anything change about that at all? I would say yes, but because further interest rate cuts are planned for this year. The interest rate cuts for this year have continued to increase in recent months. So people are now expecting 3, 4, 5 symbolic interest rate cuts this year alone. I think it will be more like 2, 3, or 4, and that's very positive because it allows us to inject fresh capital into the markets more quickly. And accordingly, we also see an end to quantitative tightening, and as a result, we no longer have this tight monetary policy. This doesn't mean that we will immediately have a loose monetary policy here, but we are getting significantly closer to a loose monetary policy already in this quarter. And of course, it is still very important that Bitcoin dominance falls. We have definitely not reached this point yet. However, this point is related to these 2 points. First, we need an expansion of monetary policy. But as mentioned, we will definitely see this happen this year. Simply because the USA has to repay debts worth $9 trillion. That's why we will see a monetary expansion, and then Bitcoin dominance can also fall. It remains an exciting year. However, I am still very, very optimistic about the coming months for this year. No matter what any banks or whatever say, they just want to manipulate you anyway. And at this point, I hope you have enjoyed the video so far. It was, of course, a lot of work, so I would be very happy if you leave a like and a comment on the video so it can reach as many people as possible. Thank you very much for that, and see you next time, friends. Bye.